sticking around, consider this the obligatory joke about being between you and the cocktail hour. We've got three wonderful panelists with us, and what's exciting about this panel is that this is a nice way to wrap up what we've done today, which is talk about the process and information that you might need to raise capital. We can finish that by talking with three people that have done exactly that throughout their careers and in the recent past. So I'm going to give each of the three panelists an opportunity to begin by introducing themselves and their company or companies, as the case may be, to give us a little bit of background on what they have done, and then we'll get into kind of the raising of capital side of it. So, Andy, why don't we start with you? Yeah.
Great, thanks. My name is Andy Abel. I am originally from Northeast Ohio. I moved here about 7 years ago when I was starting my first company, GlueTread, which is a product-based company that has tire repair products for off-road vehicles. David and I met not long after I moved here, and then ended up starting Proof Razors, which is not at all related to the off-road space, but rather shaving. And these are shaving razors that we make here in Belgrade, a couple miles that way. Surprisingly enough, there aren't really any shaving razors made in the United States, even though everyone uses them. So we just kind of saw that as a void, and then David had a product designed. He and I kind of came together and started that, and we've been running that now, I think, since 2022.
Awesome, thank you. Ryan?
Hey, I'm Ryan Abramson. I'm the co-founder and CEO of ScoutCities.com. I've been building and investing in venture-backed tech and manufacturing businesses the last decade or so, and a few years ago we stumbled into what's called the industrial site selection process. It's the art of finding where to locate your business if you make a physical product. And this business that we went through this process with had this really challenging time. They were growing very fast, had a facility in Tempe, Arizona, and needed something on the East Coast because a lot of their customers were ordering from the East Coast. They actually made oatmeal. It's called Oats Overnight, and it's becoming a very big brand now, and they needed this second facility, but that experience of figuring out, where do we do it? What's the difference between Westchester, Ohio and Westchester, Pennsylvania? Should we do it in Illinois? What are the incentives available to us? We're a startup. We're not a Kellogg's or Amazon or Intel, so are we even eligible for those things? So we set out, after going through this process, to build a platform that could connect these growing companies with communities, resources, workforce, utilities, all of these factors that go into economic development and industrial site selection, put them all in one place, and help these companies expand their business.
Wonderful. And Ron, please.
Ron Zook, CEO and founder of Swan Valley Medical. It's a medical device company that is integrated data analytics, predictive analytics using AI to help us gather data on clinical studies. We reference over 570 clinical studies and hospital databases to provide the information for hospitals to adopt our change in care. And I'll tell you a little bit more about the significant change, because we can eliminate the single largest source of hospital-acquired infections and complications, as well as urosepsis, which I understand there's a bill in the House right now that's going to fund research on eliminating sepsis or reducing it. And we can eliminate urosepsis, which is 25% of the sepsis population, with a 40% mortality rate. So we have a big solution, and again, this is, I'll tell you a little bit more about the details. Again, this is my fifth company. I've started one of the previous companies. I did a turnaround for some venture capital funds that had screwed up a company, and I had to come in and fix it. So in any event, I'll turn that over.
Perfect. Well, let's jump right into it and continue with the trend or the theme from today and talk about fundraising. You all have various levels of experience with fundraising. You've all gone through different paths to raise capital. Tell us each, maybe Ron, we can actually stay with you. Talk about that process for Swan Valley Medical. What did that look like?
Well, we did this really unconventional. Most people don't try to raise $26 million from individuals. Normally you go to a venture fund or a strategic, But we decided to do it that way because I wanted control, and I didn't want an influence on a premature exit. And so we've been very successful at attracting that, and we've used a 506B offering in multiple offerings. So we're on our 5th round right now of about, I think we're raising $5.5 million. And it's really a $6 million round. We've already raised $500,000 for that. So a total of $26.5 million to date. And so we'll be up to about $30 million when we're done, all from private individuals, accredited individuals. It's not a pathway I'd necessarily suggest because it is a lot of effort and there's a lot of education. But again, going to accredited investors that have an interest and have the means to invest. What we've got is about a 60% reinvestment rate from each of the rounds. So the guys that first came in are still participating in subsequent rounds. So they believe in what we're doing. And obviously, every company that you see never hits their targets. I mean, no matter what you think you got a handle on, it always takes a lot more time and a lot more capital. So you have to really plan on having access to some deep pockets, or at least an ongoing story that relates to your progress in developing of the market. And I think that's the most important thing is communication to the shareholders. I've sat on a lot of boards where they just send out financial statements. My quarterly reports to our shareholders are usually about 25 pages long. I go into the details of what we're doing, why we're doing it, and what our prospects are and what's not really working. So I think that's part of the issue of working with investors is making sure they understand not just the statistics or the data that you're giving them, but what you're thinking. What are the problems you're facing so they can understand that, and they can assess whether there's additional risk to participate again or how they feel about their investment in you. So again, this is a really strange kind of company because raising $26 million from individuals is no small undertaking. And so there is a lot of interface and time spent in educating the shareholders. And so I think that's really important. I think the other side is structuring your capital rounds with valuations that make sense so that nobody is underwater at the end of the deal. So being very cognizant about how much money you think you're going to need, and you structure it for certain types of things and activities you want to achieve. And if you achieve those, then you can increase your valuation for the next round. So we've done basically 4 previous rounds. We're on our 5th round now, and everyone has had a subsequent increase in valuation. So everybody that's invested in our company in the early stages is into the money right now, so they can see a gain on their potential investment. And I think that's really important. I think the other side is I think getting people to really understand that you have a value proposition they can buy into, because you attract investors that have an alignment in what you're doing. You don't want to go after people that don't have an understanding or don't have an interest in a particular market or product or whatever. And so as I mentioned, we have a very interesting company, and it evolved very differently. We started the company out with a partner that was a urologist, and he had a vision for improving a procedure's mortality rate. And so we started out with this one concept of just being a surgical instrument company. We developed it, and we became the only safe way of placing a suprapubic catheter. So we owned that kind of elective surgery market. But that's a small niche market, and he kept feeding me all of these, these clinical studies and things like that. And so being aware of, what other options do you have to expand your market and the application of your technology. So he didn't recognize it because he was a surgeon. He was just looking at the mechanics of this thing. I started reading all these studies, and I saw that, my God, this is much better than a urethral catheter, which has the leading cause of infections and complications and sepsis in every hospital in the country, in the world. And I said, my God, if we can do this, we can have a huge impact. And our market now just has become, hundreds of billions of dollars worth when you're talking about that. So, you know, right now we've changed a market that we originally started out with like 300 million at the most selling surgical instruments to now we're talking about 200 billion. And so we really have what we've been described as is creating a 100-year event that only rarely occurs in healthcare, that you discover something like washing your hands that can prevent infections. We have created the first time that you can eliminate the leading cause of hospital-acquired infections and complications. So I think when you're putting a company together, look at the value proposition you're creating for your customers. How compelling is it? Because that value proposition will be the same compelling reason or rationale that your investors are going to come in to that, and so they'll align with you. And when we started out with all of our investors were physicians. And my God, there are a lot of problems managing them because they're very detailed and always want to know what's going on and et cetera. And they're always kind of looking over your shoulder, are you doing the right thing and et cetera. But really
Yeah. They want 40 pages. You're only giving them 25.
Yeah. So I think, the takeaway here, and again, I did a turnaround for a venture capital fund and they really they missed what the problem was. They had the solution under their finger, but none of them were operations guys. They were finance guys. And so they hired me to come in and they gave me a month to figure out if they should shut this thing down. And it was a very simple thing. What we had is a marketing guy, and the only guy they didn't fire was the marketing guy, and he was the guy that should have been fired. Is what you do is when you're creating a product, you create a product spec. And that's based on the marketing requirements. So you have to understand what is the marketing requirement? What is the problem you're trying to solve in the marketplace? And then you develop your product around that solution. So you can't develop a product if you don't have a market definition. What am I trying to solve in the marketplace?
Yeah. As a consumer behaviorist myself, I understand the value proposition. It's certainly a great story about making sure you have the right people in the room. Thank you. Ryan, do you want to give us your story about raising capital? How did that come to be?
Well, I was the first go-to-market hire at 2 venture-backed startups, so I just thought this is what you do. You come up with an idea, you have a market, like Ron said, and then you go raise a bunch of money, and then you spend it all, and then you keep raising it. And that's really the only thing I knew. So when we came up with the idea for Scout and we were passionate enough to go forward, we tried to raise money right away before we did anything. We put a deck together and went out to VCs and said, this is our great thesis and we're going to storm the market. And they were like, well, have you built anything? And we hadn't. And they said, did you sell anything? We hadn't. And so it was a bit of a wake-up call for us on, one, do we need venture capital right now? Should we go do something first? So we spent about 6 months actually building the product, selling. I went to a bunch of conferences and sold the product before it existed. We had some mock-ups, we had some ideas around it, but showed people that this is what we're building, and if you want to be one of the first, you can be an early adopter. And the purpose of all this was to go back to the VCs and say, okay, in 6 months, without any product, we just sold $30,000 worth of this, and we're really confident that we can go do another 300, and then we could do 3 million, but we need this capital to fuel the next version of it. So we ended up doing that. We raised $300,000 right away, and that was really to fuel more marketing, fuel our expenses to get on planes and go sell more of the product, and ended up raising a little bit more money from friends and family. I'd say if I could do it all over again, I would really think critically from the beginning, like, does my business need venture capital? If you're like Ron, you're building a surgical instrument, you probably can't get very far without at least some funding. But the business that we were building, very software oriented, even services oriented, where we could get pretty far without spending that money. And now we're in this place where, if I look back, there's a question in my mind pretty constantly: did we need that money that we raised? And so, yeah, just think very critically. How much money do you need? What do you need it for? And can you go make that progress without taking on any of that money first? And it may change the future of your business.
Yeah, awesome. Andy, you have 2 companies that you can talk about. Your choice.
Perfect. They they have become very intertwined in a lot of ways. Initially starting GlueTread, that was something that just really bootstrapped from the beginning. I was actually an elk hunting guide and was fortunate enough to meet with someone that turned into an angel investor for GlueTread early on. That investment then got the company to a place where we could continue moving forward with R&D and sales and so on, and then that was able to, we kind of grew the company off of that. So like small, relatively small by these standards, angel investment that then transitioned into, bootstrapped and more traditional financing. I mean, coming back again here but local banks really helping us make that work. From there, after David and I met, we had kind of an interesting path in funding Proof. David has a machine shop already, so he had already had the prototype designed, and he had the machines to continue making it. Made a couple of those, and then we actually launched a Kickstarter campaign. If you guys are familiar, we pre-sold, between $30,000 and $60,000 between Kickstarter and on Shopify, $30,000 and $60,000 worth of product. We turned that around relatively quickly and shipped that out, I think 2 months later, because we had all the machining in-house. From there, we actually participated in the Launchpad event at MSU, which was, that was a $25,000 piece for us, which again, in some of these other numbers that are coming along, is a small amount, but made a huge difference for us. From there, and then now we're kind of in that middle ground between bootstrapping and working with traditional financing. I mean, I had mentioned before, Opportunity Bank has been like absolutely great to work with. I think working with some of those local banks, you can get around some of the problems that arise when you're working with some of the larger national banks. So thank you to Opportunity Bank for that. But I think the other thing in that, there's two other big takeaways. First of all, in my case in GlueTread in the beginning, I took on an equity partner, that angel investor, but making sure that was the right person. I actually had multiple people while I was guiding offer to be angel investors, and I turned most of them down, but this guy in particular was just like obviously a really high quality guy, and I just liked working with him, and that ended up being a really positive thing. We were actually able to purchase back that equity this year at a very fair price, which was like a massive, just like a massive favor, really helpful for our company, I guess. The other thing, back to partners again, David, like I said, had this machine shop, and we've been able to then grow our business in a bootstrapped manner because we can postpone some of the costs that come from machine time and things like that, just because we have the right partners and the right approach at growth here. So biggest takeaways were, partners in that and choosing the right people to work with.
Wonderful. Ryan, you touched on this, and it certainly speaks to what Ron was talking about with value propositions. But I'm hoping you might go a little bit deeper with Scout Cities and talk about the moment when you realized like the U.S. site selection process was broken, right? You went into it and just said, all right, well, we're raising capital. But can you dig a little bit deeper into that, recognizing a value proposition, recognizing that there's a gap that needs to be addressed, and how that process played out for you?
Yeah, it was probably when the company that went through this industrial site selection snafu or challenge, they got $1 million incentive package from the state of Ohio, city of Westchester. And that was a moment where this company, who previously thought that incentives were for Amazon and Intel and the biggest companies in the world, they said, wait, we're going to hire 100 people at this facility. We're eligible for that too. And they had no idea if they didn't go through all of these calls, all of these conversations. And the initial thesis for Scout was actually to be an economic development platform to help communities and economic development organizations better market these things, because these companies weren't necessarily aware, and the companies that are oftentimes fastest growing and can bring the most number of jobs and a large capex to a community are these venture-backed startups. So that was the initial moment, but the value prop for Scout has changed 2 or 3 different times. We've always been trying to solve industrial site selection, but in many different ways. And so, have that really strong value prop, but be willing to hear the market. And I think when we stopped talking to VCs and trying to raise money before we had done much, and we went out into the market and sold and listened to people, we started to realize that we were on the right track, but there were just more iterations to come of what we would need to build.
I think that's a great point for maybe all three of you to touch on, is the idea of kind of like pilot and pivot, responding to the marketplace, responding to, whether it's through a canvas or whatever it is you're doing. Can you talk a little bit about the experience of going through that process of saying, we got it close, not quite right? Did you do it a lot? Did you do it a little bit? Are you still in the process of doing that? Is it something that is ever completed, right? Ron, do you have any place to start with that?
Yeah, I think you're always evolving on how you're viewing the world, because things change all the time. And, just in our area, hospitals are very bureaucratic, and trying to, how do you break into market to this in a traditional sales organization doesn't work. And so we don't have a sales organization. I have several retired hospital CEOs that make calls and get us in the door to talk to the right people. So having to try to approach, how do you get get this message out? You can't really advertise. That's not a means for doing this, and in a lot of places that doesn't work. But really, I think just looking at a different model. Don't try to match something that you've seen around the world, but just look at what your unique needs are and try to match up with what makes sense. And it could be a totally non-traditional way, like we've done, is marketing to a hospital, which is, they're all billion-dollar businesses, and they're full of bureaucracy, and how do you break those walls down? And so you have to kind of figure that out, and you make a lot of mistakes, you waste a lot of time, but it's invested, I guess, in the education of how to develop a new market that you've created, and there's no roadmap for you, so you have to kind of figure it out.
Yeah, awesome. Andy, your thoughts?
Yeah, I think both companies I've been discussing had pretty massive shifts. GlueTread, we actually had a product that got into Tractor Supply stores across the country, and that was right before COVID. So products went in, COVID hit, they pulled all that product, and they pulled all new products. And at that point, we actually totally shifted from a product that would be like retreading a tire, putting grip back onto an agricultural tire. We switched from that to using the same technology to be able to repair the sidewall of the tire to hold air pressure in the tire, so that a tire that has damage in the sidewall can still be used. So that was the biggest pivot there, and that happened largely because of COVID and the pulling of all those products. The proof one was really interesting. We did that crowdfunding campaign. It turns out there's a large group of people out there that are what we call shaving enthusiasts, which there's a lot of people that watch other people shave on YouTube. You may or may not know that. So what ended up happening is the majority of that $60,000 of sales that we had through Kickstarter went to these shaving enthusiasts. So you have all these people all over the country that love shaving, and they use the razor, and then they gave a lot of feedback. They're very vocal about their thoughts of your product. So we took that feedback and then made large changes to the product, which led us to the razor we have today, which is it looks very similar, but there are some major changes in there that you wouldn't know unless you had gone through the process that make it function much better. And again, that's just directly off customer feedback. And again, funding that change was directly from the MSU Launchpad event. That's what funded that change. So again, local community partners. So.
In preparing for this, I didn't expect anything about watching people shave on YouTube.
Neither did we.
So
yeah.
I don't have any no further questions on that.
Brian, I've got one thing on pivots.
All right, please.
We set actual pivot points, especially in the beginning when you are trying to figure it out. It's called a pivot point. It's on the calendar. The purpose is to review the strategy that you've been working on for the last 3-6 months, whatever it is. And we've gone through 2, and on this last one, we haven't had a pivot point because we could feel that it's working. On the other 2, we're like, we're excited for that pivot point to come to discuss it because it doesn't feel like we're flying. And then on this last one, we haven't set one. So we feel like we may again at some point, but we feel like we found the right market.
Congratulations. That's wonderful.
Still a lot to do.
Oh, sure. Tying it into the idea of investors, for all three of you, any has there ever been any points of friction with investors and kind of their ideas of where the direction versus the, and Ron, you said you raised capital specifically in a way to not have to deal with this. So I would hope that maybe you can touch on that a bit more. But the idea between friction between you as the founder or co-founder and the investors who are putting the, the money on the line in stories, cautionary tales in that space. And Ron, maybe we'll start with you.
Yeah, that's. Yeah, that's a really good point, because I chose to get away from the venture capital side because they are traditionally interfering and usually elect to go at the first exit that's available, whatever. And so I wanted to control of that process. And I think that having individual shareholders, it's a lot more work, and there's a lot more time spent in keeping them on board and et cetera, and taking calls late at night on weekends and things like that. But a lot of my investors are physicians, so they understand the technology and that. And so I think that's, traditionally if an investor's in there only for the money and the return, you're going to run into that problem. They're going to be dissatisfied because there's delays, because there always are, and they're all over you. And I've dealt with a lot of venture funds and doing a turnaround and things like that, and they can be pretty ruthless, and it is all money to them. And so I think having shareholders that are aligned with not only the financial goals and opportunity, but what you're actually doing. Do they identify with what kind of product or technology or service you're providing? And then there's going to be a lot less friction involved in that, because they'll kind of understand that. And I think it goes back also to the communication with the shareholders is if you don't stay in touch with them, and then when there's a surprise, that can cause the friction. So try to be aware and be honest with them. Tell them what you're thinking and what you're worried about, so that they know that they can be comforted that you are thinking about things that can go wrong, et cetera, and they're a little bit more prepared for, whatever comes out of it.
Wonderful. Andy, how about yourself?
Yeah, I think we've been fortunate to avoid any tension by not pursuing investors that we don't think are a good fit. We've, for both companies, had a lot of interest in investment, and money is speed, so you're always tempted at these large offers or whoever it might be. But really, I think, especially with Proof, David and I have put a lot of thought into who we want to work with and what kinds of people we'd like to work with, and thus far, that has led to us not actually accepting any investment, although there have been quite a few offers. But it's, with GlueTred, I think things went really well with the investor that we had, and that taught a lot of lessons. I think, kind of like you were saying, Ron, with making sure that the goals are aligned with the companies is huge. And we haven't been in desperate need of the funding, which helps, but we've had some opportunities that we decided not to go forward with because we saw that there may be problems down the road with misaligned goals.
Gotcha, yeah. Ryan, anything to add on the idea of friction with investors or efforts to making sure that everybody's on the same page?
Well, you could do a memo like Ron, which is good. Keep your investors aware of what you're working on. We do investor updates. I'd say in choosing investors, if you are so lucky to be able to choose which VC invests in your company, you're in a great position. And then at that point, find the people that you really like to be with and like to work with. The value that they add is obviously very important, but if you like that person and they like you and they believe in you, they're likely going to help you and be valuable. But in my experience, the VCs that we've worked with and the ones that have invested in our company, very, very helpful right in the beginning. And then they've got a lot of other people to help in the beginning. And so if the money is what you need, that's probably the most important thing. The relationships and what they bring value-wise is, in my opinion, secondary, unless maybe you're making a very specialized product where they understand the market super well. But their connections and their introductions to your first customers will only go so far.
Wonderful, thank you. I have the same question, but two different sides of that coin, for you, Andy, and for you, Ron. Recognizing that there's been multiple starts for both of you. Andy, you've done two, and we can maybe start with you, Andy. The GlueTread and Proof, yes, they're both goods, but that's about, in manufacturing, but that's about where that ends. How did your experiences in starting GlueTread translate or guide the way you worked with investors, the way you thought about whether or not you would work with investors as you entered into Proof? And then you said something, you just touched on it very quickly at the very beginning, and I'm hopeful that we might be able to circle back to it. You said that they ended up coming together pretty quickly, as there's synergies there. I'm not saying it right, but that's what I heard. Can you talk about that a little bit too?
Yeah, certainly. So I think with the first point, the similarities that I personally draw between the two companies are they are both made in U.S. products. These are not imported things. We're not private labeling anything from China. We are actually manufacturing these things ourselves, some in Ohio, some here in Montana. And they're U.S. made products that are at the highest level of quality in their space. So, you don't think about needing high quality tire repair products. But at the end of the day, if you're using a tire repair products, because you're having a pretty bad day. And these are generally products that are used by people that are doing pretty extreme types of off-roading in very remote places. So the quality there is really important to us. So those are the parallels that I draw between the two are U.S. made and highest quality in their space. As far as how the two have helped each other, or the experience have helped each other, I think we were able to get Proof to the place. It took us, say, a year to get Proof to where it took us 3 or 4 years to get GlueTread. And I think that is just experience and understanding how to move quickly and what kinds of decisions to make, and how to prioritize all the different opportunity that you have. I mean, we have literally unlimited opportunity in a machine shop. I mean, we take a bar of aluminum and turn it into a shaving razor. We could take that same bar of aluminum and turn it into whatever you want, a comb, a pocket knife, a toothbrush. I mean, the options are endless. So, but understanding, what the market needs and then how we can best serve that. Last piece of that was how are the two intertwined? So what David and I both had were very different things. David, like I said before, has a machine shop. He's been doing design and machining in various different industries for a long time. And he had all of those assets ready to run. On our side, I grew up in a town of 1,200 people in Ohio. It's really important to me to have at least some parts of these businesses there. I'm very loyal to my hometown. So we have about 15 employees in Ohio that run the shipping, customer service, and some of the assembly and a lot of infrastructure pieces for both companies. And then what that's allowed us to do is we already have this infrastructure assembled, both with the machining capability and the back-end administrative capability, to kind of work together on that. So we're now at a point where the machine shop is that the same machines that make the razor are also making 3 different parts for GlueTread products. And those are parts that you couldn't otherwise have made in the United States. Well, I mean, you could, but it's not done. But since Dave and I had this relationship, we were able to do that. And then, cash flow then can help because GlueTread is further along than Proof is. So we can pay for those products, which helps keep everything else running. So it's kind of really turned into an ecosystem, which I know was talked about earlier, but which has, I think, really helped both of us. So
Wonderful. And if you need to know whether or not Ohio was the right decision, I know a guy. He's right there. Ron, the same kind of question is at the root of the question is using existing or past experiences to inform future decisions, right? And you said you had 5. You've had 5 companies. You're on the 5th round of funding for this 5th company. I'm curious to know what experiences you learned from the first company that have helped or hindered this 5th company, and then I'm curious to know the process of fundraising in between rounds 1 and 2 versus rounds 4 and 5 of this last company. So, broad strokes, experiences. How has that modified? How has that changed your approach?
Well, I think that. Hello. Okay. Yeah, I think that the first company I did was another idea that I had that was in the medical technology area, and there were similar issues of the investor side that came in the communications, and the problem of bringing in investors that are in your industry, they have their own ideas about how things should be done and what you're doing about the product or whatever, so they want to critique everything you're doing. So that's the good and bad of it. But you know, we try to restrict that, and some investors or even board members that you can start, you know, bypassing you and going to your staff and things like that. So you really got to manage that very quickly and shut it down and let them know who's running the show. And that's one of the reasons I shied away from venture capital, because there's always the conflict there of them wanting to tell you how to do things, because they have all this experience in investing in companies, but they don't understand exactly what you're dealing with on the operating side, and they just want to see the end goals met. And I haven't ever seen anybody's plan that you put together that you actually meet. So I think that the reality of the thing is you have to temper your major goals and stuff with that. And I think it goes back to communication with your investors, if you can pick them. I think the turnaround that I did for the one company had 3 venture funds in it. It was basically just incompetence of understanding basic how do you develop a product, and how do you set what is your market, what are the specifications for the product, and et cetera, and how long does it really take? I mean, they're not known for being patient. And so you kind of have to, I think it goes back to communications, really being open with communications, but in letting them know who's running the place. Even in the turnaround I did, the VCs were, very anxious to either write it off or move on, and they kind of already made the decision, but I think they had their senior partner saying, hey, hold a sec, before you walk away from $20 million in investment, we'd like to get some outside opinion. And so that there wasn't a lot of support for me going in to solve the problem, because they didn't think there was a solution. But it didn't take me very long to find the solution. In fact, only 2 weeks, and I interviewed every employee in the company, which was about 35 people. And so, again, it's just a communication thing, what the goals are, and recognizing who's running it. And I think sometimes you have to exert your authority on that, because it can get out of hand quickly.
Yeah.
And I don't know if I'm really answering
No,
the question.
I think that's
you
great.
had.
I'm curious, to what degree did you leverage your past successes when talking with investors, say early on with this first one?
Yeah, that's a good point. I think that the more experience you have at running successful companies gives investors the confidence that you can do it again. Past successes certainly are going to help you if you're trying to raise money, to have a reputation of doing what you're actually going to do. So if you're a first-time CEO, you got a lot of people looking at you very closely. So I think that that goes with the territory too. And I think the other side of this, and more importantly, I think, is picking a really good board, a very successful, experienced board that understands your industry. Don't pick somebody from outside the industry. Pick somebody that can help not only advise you, but also to support you in your decisions. And I think that's really important. People, I think, ignore the importance of an outside board. They can be extremely important, not only with compliance and making sure that you're doing everything the right way, because you find the expertise. You have your corporate attorney sitting at all these board meetings, and then you pick somebody like a hospital CEO sits there, and a physician, and so I think that you basically have the representation on your board of all of the elements you're dealing with, and they're familiar with your industry, the product you're doing, and I think you can lean on them too, because you don't have all the experience, you don't have all the answers, plus you don't want just everybody agreeing with everything you say. You want somebody to challenge you. So I think that would be the best advice I could give.
Excellent. I'd like to pivot just a little bit here. We've heard about it a bit today. I think it's a topic that we hear about quite a bit. when we talk about Montana and the state of the Montana ecosystem for entrepreneurship, et cetera. I'm going to go out on a limb and say I don't know how much the three of you agree with that. Can you talk a little bit about your experiences doing this in Montana versus doing it in California or Texas, Florida, wherever it was? Places that are better known for it. Andy, why don't we start with you?
Perfect. Yeah, I think, one thing I've touched on a couple times now is just the community here. I think, like I said, we had Montana Knife Company's been really instrumental in helping us get that figured out. You talk about picking a board of advisors that has information and understands the industry that you're in. They've kind of acted like that for us and really helped us understand the direct consumer market. I think that just that communal feel has been really nice. I do think that there is some challenge in it just being like a smaller place population-wise. There are just less people here, but I think the people that are here, I think a very defining characteristic of the people in Bozeman specifically are they like being here, so they're proud of it and they're proud to be here. And it's hard to be here. It's expensive. The winters are cold. Things like that. So I think they're happy to be here and proud of other Montana companies, and also like they try to help other Montanans as much as they can.
Ryan?
Yeah, my experience has been a little bit different just because I was here. I wanted to start the company here, and we are still very small. It's myself, my co-founder, who's outside of Seattle, and then our first employee was in LA. And we took the approach at the beginning to be fully remote. We just wanted to get the three best people, go as fast as we can. And now we're in this position where we're about to hire 2 people, business development, customer success, and I'm about to experience what it's like to hire here and build the team here. That is my preference, is to find the talent here and to build a culture in Bozeman because, yeah, like Andy said, folks here are very passionate. They have interests outside of work too, and they can bring those new ideas from all of their other pursuits into the company. So excited to see what it's all about. If anybody has experience building teams here, I'd love to chat with you after this and talk about where you found those folks and get to know you. Thanks.
Follow-up question. Did you run your company through your software to see if this was the right decision?
Well, we're not an industrial business, but yeah.
Second follow-up. Can we hack your system to make it so that Montana is the answer for every company that runs through your system?
We'll see. I've chatted with the good folks in economic development here in Bozeman because, as I mentioned, we started the company as a marketplace, and we wanted to be Yelp for cities. We felt like you could get more information about the best hotels and best restaurants, but how could you not know what it's like to start a business or grow a business in all these areas? So I have a lot of affinity for helping this city attract great jobs and investment. We're actually working on a very large $3 billion EV tire project that Montana's on the list, which is pretty cool. So hopefully if we could get the right workforce, I think there's definitely a chance. But when a company is bringing that many new jobs, it does come down sometimes to population size and what is the ecosystem like already. So we are somewhat challenged there, and just there's not that many people here, which I think is probably part of the reason we all like it. But so that's a really interesting dynamic.
Ron, challenges, opportunities that you have experienced yourself doing this in Montana.
Yeah, I had a place on Swan Lake and grew up in the Flathead Valley as a kid and went to Polson as a grade school and went to MSU for engineering degree. So I'm a Montana through and through and didn't live here. I lived in Europe for a period of time in Minnesota and Boulder, Colorado. And so when I started this, all of my engineering talent was not here. And so we developed the product in Colorado because the last couple of companies, I had used some of my past aerospace engineering colleagues and things like that too. I always over-engineer everything, so it's bulletproof, and believe in that. And so that's where all of the development happened, and also the manufacturing processes and stuff. And so we are there. So our manufacturing system, final device assembly, is still in Denver right now, and I'd like to move it up here. And I intend to do that at some point in time before the employment gets too high. But I think the engineering thing was just easier to do in the Denver area because I had access to all the people I knew, and we could get this thing done. But I'm living full time in Montana. Have even when I was connected with making this, just starting this company. So, Swan Valley Medical basically is. I live in Swan Valley on Swan Lake. That's my connection. And so I think that my goal is to move manufacturing up here. I have looked at it, it's not economically any better. With the real estate values in the Flathead Valley, the lease rates are no better than Denver, Boulder. But still, I think the issue is finding, a good quality place. And I'm thinking maybe the Indian Reservation in Polson would be a good place to put a manufacturing facility. So I'm looking at that site and talking to the tribe right now because there's underemployment there, and the cost of operating there, tribe has even offered to subsidize facilities and things like that. So we're looking at that as a future thing. So yeah, I think the R&D side is always temporary, so you can kind of do that anywhere. But I think when you start really building a company and you want long-term employees and that kind of thing, I'd like to see that happen in Montana.
Wonderful. Okay, we're going to go a little lightning round here, and we'll go back around the horn and start with Andy. Real quick, the biggest failure and what you learned from it.
In business specifically?
Yeah.
Okay.
It'd
be easier
high school
otherwise.
dating,
Yeah.
I think. Yeah.
Yeah, let me get into that. I think the biggest failure for us was in GlueTread and starting the company in a place where we were trying to retread agricultural tires. And the biggest thing we learned there is that those people were buying retroactively after they needed it, as opposed to buying something they might need later. I think if we would have made that decision better, we could have saved about 3 years. So.
Okay. Ryan, biggest failure, what you learned?
Any moment that I stop trusting myself is a failure. I do have those moments, but I'm getting a lot better at reminding myself that I'm here for a reason, like in this business this far, and those moments are, the failure is not trusting yourself. And so if you've had success other places, you can have it again, and don't get in your own way. So,
Ron, to you, biggest failure, what you learned?
I think I just refer to Swan Valley Medical because it's the most recent thing. I would say going after individual investors instead of a major fund, because I spend all my time on raising money and shareholder interfaces. So I guess there's a good and bad of that, and the good part is I've already talked about. So I could have gone a lot less time, much more efficient from a time usage, but in the end, maybe it'll pay off for all of us because we won't have somebody trying to steal the company or whatever. And I don't play well with others, if I'm not in control. So having somebody in there messing with me doesn't work. So.
I do echo that. I don't want to knock anyone in the institutional investing world, but I spent a lot of time talking to VCs and talking to people who had ideas for my company or wanted to invest or wanted to introduce me to other people. And I'm just now 2 years in, finally taking like a very hard stance that it is a distraction unless it is truly mission critical. And so I'm only talking to customers and potential customers, and it is a welcome change.
Andy, what are you most proud of? Again, with your businesses.
Not high school dating.
Not high school dating, no.
I would say I'm really proud of the bootstrapping and somewhat gritty approach that we've taken. I think Dave and I have both had opportunities to take what seems, at least in the beginning, like an easier path, whether it be accepting, kind of like you're saying, accepting, investment or whatever. And, it's definitely a harder path, and I think in some ways is more stressful, maybe not, I don't know. But Yeah, I think really trying to make it work and doing it in a very genuine way, a very transparent way about like, this is what we have, this is what we offer, we stand behind it, we're proud of it, and we're making it happen, you know, in a very, again, bootstrapped and general way. So
Awesome. Ron, what are you most proud of?
I think thinking outside the box and recognizing a major market that my partner, Dr. High, didn't see. He saw, based as a surgeon, he looked at the world from a very myopic point of view of developing a better, safer way of doing a procedure, which I bought into and saw immediately. But after he got me reading all these damn clinical studies, he'd send me boxes every week, and they'd be redlined, and he didn't know anything about a computer, so I had to read all this stuff. But what I did get out of it is I recognized something he didn't see, and that was, you know, we have discovered a way to eliminate the urethral catheter, the single largest source of infections in hospitals, by replacing it with a suprapubic. He didn't see that market. He saw this as an elective surgery market for urologists to have a better, safer way of doing the procedure, which replaced a procedure that had 4.5% mortality. So that was really good, but it was a niche market. And so I think keeping your eyes open to the possibilities, you know, the horizon, and looking at something fresh. And sometimes I think when you hire staff that are only associated with one industry or whatever, they are myopic as well. And so getting that cross mix of people from different backgrounds, I think, can open your eyes to possibilities you can't recognize or don't see right away. And so I think that's probably the best thing that I saw, and it actually opened up an enormous market for us.
Right. Ryan, bring us home.
Yeah, I'm most proud of being an outsider in my industry. I, for a while, thought it was a detriment, and 4 years ago, I knew nothing about industrial real estate. I didn't know much about economic development, and I thought it was going to hinder us, and it has propelled us because we question everything. We look at something that's been done forever in the industry, sending out a property brochure via PDF instead of on the map that's interactive for the client. We're like, why does this exist this way? And we've been able to make a lot of strides with our product because we're outsiders. And then also my relationship with my wife has remained very, very strong. And she's there in the back. And yeah, because one of my values is to not give up my physical, mental, or family health to win. I'm very, very competitive. I'm going to win, but I don't want to give any of that up. So I'm proud of that too.
So pride in process, pride in value proposition, and pride in values. Awesome. I think we have a couple minutes for questions. Is that correct? Yes. So if we have any questions for the panelists, happy to field those now.
Thanks. Thanks, everybody. You guys, super inspiring stories, really cool companies and products. I run a text marketing, my name's Nicholas Wicks. I run a text marketing platform here in town, and looking to raise around towards the end of this year. Did any of you guys consider revenue-based financing on your paths? And if you did, why you decided against it?
I'll take the start, I guess. No, it didn't. Mainly for probably never done it before, and just a traditional aspect of we were raising a lot of money, and so, you know, it didn't seem like that was. I guess it didn't even come across in my mind. I guess it was not the way I was thinking, but I could see where there's an opportunity for doing that. But we never even considered it.
Could you explain revenue-based financing? I imagine you have to have revenue.
Good question. I mean, I'll try to speak to it as best I can. Stacy kind of brought it up a bit in her slides, but it's my understanding is it's a non-dilutive way to raise financing, kind of a bridge between community development financing or more traditional and angel investing. So you know, I mean, to Ron's point, and I think for all of you, you know, it's a way for founders to maintain control of their company and not dilute ownership, but to get the capital that you need to scale. initial scale. Yeah. So yeah, exactly. The company ends up buying back the equity, right? Paying out with a share of revenue and buying back the equity.
Well, if you think it's viable and you could do it in a non-dilutive way and you really believe in the enterprise value of your company, then I unfortunately don't know enough about it, but if you're trying to preserve that equity because you feel like you can get a multiple in the future on your revenue, and again, enterprise value is a priority, then the non-dilutive path is probably an option.
I love revenue-based financing, and when I started Frontier Angels, Kevin Lernan started the Boise Angel Alliance, but he has since started Loon Creek Capital, and they are a revenue-based financing company based in Boise, and it's an absolute fabulous way to finance a company. But you have to have revenues, and it is a good way to do it, though.
I think I have another comment to it is, I think if you're doing multiple rounds over a long period of time, there's a way to protect your equity investment. You can participate every time, but also you raise the valuation every time so that dilution decreases as risk reduces. So we're on our 5th round right now, and we've raised 26 million, and I still have a very significant amount. My percentage ownership has gone down, but my value has gone up. And so I haven't lost anything, I've gained. And so that's the kind of way I look at it is that just you can always increase the value of what you do own, even though you are going to get in some dilution. And I think with subsequent rounds, you can always raise the valuation to really minimize that as you progress along your objectives. And so that's what I always recommend is stage rounds. Don't do everything at once. Just set those intermediate goals that this is going to fund this, and then I'm going to raise the valuation for the next round, and then that protects all of the existing guys. But there's still some dilution, obviously, but I think you can minimize it.
Andy, thoughts?
Ours kind of functioned that way a little bit with my angel investor, but that's not really how it was structured in the beginning. We kind of had almost like a handshake agreement that was like, at this point, we'll buy it back. So I mean, that's kind of maybe in the same round, but it was tough. I think, I don't know, at least the problem that we found around that was just like cash flow is hard as you're growing, so it's like, I'm not super familiar with how that would be structured, but the way that, that we had it structured was it definitely strapped us in a cash flow way, but I mean, we're back to, owning the full 100% of the company, which is good, so.
Yes.
Yeah, and it was kind of great to hear, the individual high net worth capital raise that you did. It sounds like from Swan Lake, and more of the bootstrapping that you guys did. I think one of the things I've worked globally overseas, also worked in venture backed, and almost got offered a small business to take over after my first job. And I think what I see is one of the things, venture, private equity, growth equity, infrastructure finance, which is what my background more recently is. I think we are the envy of the globe of the depth of our capital markets. And I think that spans all of this type of capital. And so I think what I would take away is just make sure that you're using the right tool for your business, who you want to be as a founder, how you want to grow, but don't take any off the table. And then my last thing is let's remember who the shareholders are of the venture capital firms. They are institutional investors, which are retired teachers, retired firefighters, retired police officers. And I work a bit in the clean energy space and climate space sometimes, and people kind of want to deride the institutional investor, but they're just your retired mother or father, or your future insurance payout, and so they have a return that they need to do too. And so, but all wrapped up, this is kind of one of the things that makes the U.S. really unique. So,
America.
Yes.
Thank you so much to the panelists. Thank you all for sticking around. Thank you to the commissioner for hosting us today. We look forward to seeing you all upstairs in just a few minutes. I think there's a farewell, is that right? That's right. Okay, thank you all.